Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, it has been a rough and tumble couple of weeks in that stock market. I know you analysts out there, you see the formations and you see that your indicators, some of them in the NASDAQ are down, some are up. In the S&P, they're pointing up. Other markets are pointing down. They are all over the map, traders. And when that happens, sometimes you have to look for other things to point you in the proper direction. With that in mind, for 07/21/08 Monday, we have a green Omni. And I kid you not, do your own homework and do not take this recommendation unless your work agrees with my work. But my work says you don't have a choice but to let this thing relief rally a little bit. And we are day traders, so if it's going to have a relief rally, we might as well jump in. Now, traders, I've told this to you many times. I am going to be nimble tomorrow because what I usually say is if you're in a bearish market, you're better off letting it rally and then selling into that rally and buying it back when it dips. But I think from the analysis that I have seen, that we likely have a couple more up days coming. And again, as day traders, we just can't sit on the sidelines for days on end. So we're going to try to be nimble and we're going to try to catch a little upside momentum. Now, I spent hours and hours reading the newspapers today, every financial paper I can get my hands on, and the street basically thinks there should be a little bit of a rally. Their reasoning behind it makes a lot of sense. And the charts are telling us the same thing. So if the technicals and the fundamentals and the herd mentality are all pointing in one direction, the odds are good that you may get a stab in that direction. Now, I will say this, no matter what happens, don't fall in love with the upside, no matter what rally, if at all, gets produced in the next few days or even a week. Do not fall in love with it. Do not get caught up in the, oh, it's the big bull scenario. We are in a bearish market. And it is going to take a lot of time for all the bad news that has been trickling through our economy to finally move through and move out of the economy and give us a chance to recover. Many times, you have a lot of stages of digestion here. First is the crisis that takes place. Then there's the reaction to the crisis. Then after the crisis, you get a little bit of calm. And then the crisis that actually took place takes its effect on the market. And that we haven't seen yet. We've heard of the banking crises. It's been pushing our market down slightly. The economy has certainly not digested it completely. I don't think that would be possible on the small amount of down movement we've seen so far in compared with the size of the banking problems that we have. So just keep that in mind. Don't fall in love with the upside. A dead cat bounce is a dead cat bounce. Switching from bear to bull usually takes a capitulation style event, and we haven't seen that yet. What I can say we have seen is after a huge piece of terrible news hits the market, we get these little V formations that last for a little while and carry us up until more bad news sets in. And that we've seen that in the beginning of the year. We've seen it around March. I'm going to show you a few charts to show you a few areas where after bad news has hit the market and we jolted down, we put in this little V formation, came up a little, and then resumed the bear move. And I think that's all that's going on here. So again, don't fall in love with that upside. With no further ado, traders, let's get you to the charts. Let me show you what I'm talking about. Okay, traders, you are looking at the S&P Cash Daily Bar. The S&P Cash Daily Bar has a characteristic that seems to come up from time to time, and I wanted to point that out to you because it appears that we are in the throes of one of those right now, and I think that you can trade it that way. Again, paying attention that we are in a bear market, but if you look at the illustrations on this chart, you can see that after a substantial down move, a little V formation gets put in place, which produces a rally and another drop. And then a V formation gets put in place here, which produces a rally, and finally another drop, which gives us another V formation. The rally was a little greater on this, and then the drop, and another V formation, which we are in now. Interestingly enough, this one is Societe Generale's Rogue Trader. This one happens to be Bear Stearns Bailout. and this one happens to be Freddie and Fannie. Wow. After each one of those big pieces of news hit, we put in a little V formation and rallied out for a little while. Again, don't fall in love with the upside, but that's what's happening now. These are quite simple formations. You can see them right there. Here's where we are now. I would imagine we can at least get this high to test the left side of the V before running out of steam, maybe more, but let's trade what we get. One last thing to remember is we still are just coming out of a major head and shoulders formation, so don't fall in love with the upside, but there are these little V formations that take place, and we might as well trade them when they happen. Let's look at a few more charts. Okay, traders, now you're looking at the Dow Jones Industrial Average Cash Chart, and once again, the illustrations are pretty clear. They're cut and dry. After a nice drop, you seem to get the V formation, little rally. Again, once again, Societe Generale, then Bear Stearns, and now we have Freddie and Fannie, and both of them, plus many others. I know those are the big ones that are in the news. That's why I'm throwing them out there. But you have IndyMac, and you have a lot of other banks. 19 of them were just put on a list that you can no longer short sell without borrowing the stock first. That in itself should produce some kind of a little rally because those stocks were cheap. Those stocks, which were expensive, became very cheap in the last few weeks, and the Fed just put the kibosh on going naked short. So that in itself should produce a rally, and lo and behold, right in the middle of one of these little V moves. Interesting enough to me, but again, Societe Generale, just like you've seen it, Bear Stearns, here we are now. I think that there's a little bit of writing on the wall there for us day traders. Remember, we're not falling in love with any position long or short. We are right now in a bear market, but looking to catch a possible bounce. Let's look at one more chart here. Okay, traders, once again, now you're looking at the Emini Russell and the small caps doing the same thing as the large caps. I wanted to make sure that you've seen it's not just the largest cap trades. Look, you have that little V formation here. Then you get the other one here, you get another one here, and here we are in the throes of one right now, including breaking out of the resistance line. So the E-mini Russell is pointing towards the upside with this little V formation that you keep seeing over and over. Remember, traders, I already gave you the dates, disaster date, disaster date, disaster date, and from there you seem to get little rallies. Now, the Russell, what's interesting is it looks like it's already at the left shoulder of this V move. Let's hope it gets a little follow through and makes its way a bit higher. Again, we are day traders. We are not looking to ride this into the sunset, but I think we need to go green on this one for tomorrow. Do your own homework and tell me what you find. So, you've seen the charts. Traders, was that simple? Are these techniques that I show you at least simple for the eye to see? That is the basis of what I try to show you in these videos, traders. You know what? Keep it simple, stupid. It's an industry term. I have seen it throughout my whole career. Keep it simple, stupid. Traders, if you keep your analysis simple enough that you can understand the reasoning behind why you're getting in and getting out, I assure you it will make your analytical life so much easier. The more complicated you make this, the more you can't understand why it didn't work when it was supposed to, and you don't even really understand why it did work when it did, and how is that supposed to teach you how to do this going forward? So I try to teach you the simplest techniques that I can find that really do work well, traders. And believe me, keeping it simple keeps your life simple. Trading is extremely complicated. So the analysis that you put behind it, of course, you have to be sophisticated and use the best stuff you can get your hands on. But when it comes down to it, basically keep it simple. Don't get too complicated. All right, traders, I hope these videos are helping you, because that's the purpose of the Omni Trading Academy. It's to help you get these charts right, get the analysis right, and then go forward with your trading career. It isn't easy, but it is absolutely learnable. You can achieve the knowledge that you need to look at charts in both a simple and sophisticated way and come up with trading strategies based off of it. And traders, I kid you not, we can teach that to you at the Omni Trading Academy. So get yourselves down to www.livewithoscar.com. Grab yourselves a membership. The memberships are free. Grab a membership. Come on into the chat rooms where you'll find me on live webcam, audio, and video, and I will instruct you and teach you how to get this right. All right, traders, with that in mind, for July 21st, 2008, I got July right that time, Mikey, all right, for us there. I usually look at that 7, and no matter what, I can't think the word July for anything. This is the first July video that I actually looked at that 7 and got July out. Hey, I'm getting sharper here. All right, traders, so for tomorrow, the 21st being Monday, the S&P E-mini, the ESU8, if you will, Omni says to buy in the mid to low 1250s. Trading 1258.5 currently, traders. Do your homework and get your orders in. Buying in the mid to low 1250s. Before I go any further, I kid you not, this is a very risky trade. It is a counter trend trade. And it is not one of those trades I like to get us involved in. But you can't deny what I just showed you on those charts, plus indicators pushing below it. So let's take the trade. Only if you agree, do your own homework. Anyway, we're buying in the mid to low 1250s. Omni's profit objective is a possible run way up into the high 1290s. I will give you an absolute profit objective tomorrow at my site. As the data collects, you know I will give you the objective. So get yourselves in the trade. Find a sensible place to put your stops in. Traders, volatility is wide and swift. And if you are going to trade with a little stop, you are going to get knocked out like a little kid. Do not place little stops. Make sure you put your stops out of the traffic area. If you can't figure out where to put them, at least come on down and huddle with us in the trading rooms. As I always say, not to trade alone. Don't trade alone. We can help you figure out where the market will likely go next. All right, traders, so if we get a nice run up, then I expect that we will probably run out of steam very quickly. But tomorrow and maybe even the next day should be some follow-through if, in fact, the bulls come in and try to goose this thing. On the way up, traders, I see some resistance at 1277, so keep that in mind. All right, traders, make sure, once again, do your homework. Keep your emotions out of this thing and trade what you see, not what you think or hope for. I hope for and think this market's going lower. I'm trading on the bull side tomorrow because I trade what I see and I don't care about what I think. You shouldn't really care too much about what you think either. If you're a technical analyst, you should be caring about what the analysis is saying to you and nothing about what you hope will happen. All right, traders, if you like these videos, please subscribe to them at my YouTube spot. It's www.youtube.com/futuresanalysts. When you get there, traders, make sure that you rate the videos and leave comments so that it helps other new traders out there. Traders, you Omniacs who come to my videos and my site, you already know what the Omni Trading Academy can do for you. Help me help the new traders out there that are in shark-infested waters and are buying bullcrap programs and being told things that they shouldn't be told, because there's a lot of bait and switch and bait and catch going on out there, and that is not what we do here. So help me help them, traders, by rating the videos and leaving your comments. Gear your comments towards helping other traders. Let them know what we're doing here. Thank you so much for that. All right, traders, call me anytime, day or night, 702-629-4755. Guys, anything I'm leaving out before I skedaddle out of here?
Sounds like you covered it to me.
All good?
You're all good.
All right, traders, remember, go look for those V formations, pull up your own chart, see if you can find them, and keep your emotions out of trading. One of the best ways I can help you with doing this is to tell you to say this to yourselves every day, over and over again, especially when you are placing your orders, and you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.